Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on today.
Good afternoon, Devin.
Well, the Federal Open Market Committee is meeting this week, and so we can expect to hear from Chairman Powell about tapering the Fed's asset purchases. At the same time, it's widely expected that the Bank of Korea will raise interest rates again. But more than tapering, it seems what the market is really interested in is when the Fed starts raising rates. Tell us about the situation right now and how it might impact Korea.
As you said, Devin, market's general expectation is that U.S. Fed will begin its tapering but leave interest rate unchanged this month. And Bank of Korea will raise the key interest rate by 0.25% this week, which makes the key interest rate in Korea 1%. Since both contractionary policies were much expected from a month ago, markets' response would be, I think, limited. Particularly the annual Korean inflation in October has exceeded 3%, which is the highest inflation in almost 10 years. Because of this continuing high inflation, there can be further interest rate hikes until early next year. And it quickly raises market interest rate further. Actually, the interest rate on mortgage loan increased up over 5% level, which gives bigger burden on households. Over 1,800 trillion won debt. And the schedule of U.S. Fed interest rate hike is much expected the end of 2023. But since they are going to start their tapering this month, their interest rate hike schedule could be started sometime the end of next year.
Well, it seems like we will hear something from the Fed by tomorrow. In the meantime, stocks in New York closed higher yet again on Tuesday, setting new record highs across the three main indices for the third session in a row. What's the story in the global markets?
U.S. markets autumn rally continued Tuesday, with stock indexes hitting more records and the Dow Jones closing above 36,000 for the first time. NASDAQ also picked up on Tuesday. The latest positive earnings report appeared to support the market's advance, with Pfizer's, Under Armour's, and others rising after solid quarterly disclosures. Dow added 0.4% and NASDAQ gained 0.3% yesterday. The two benchmarks are all up at least 6.5% according to my calculation this quarter. Thanks to a strong October performance. Asia markets all dropped today as coronavirus spread out more in China. Shanghai market dropped by 0.1%, and Hong Kong market also dropped by 0.3% today.
And today, Korean stocks were quite a bit lower. Retail investors were buying, but institutions and foreign investors selling. So the Kospi is back below 3,000 points now. The Kosdaq still holding on at 1,000. Tell us about the domestic market.
Even with U.S. markets advancement yesterday, domestic market declined today as investors take wait-and-see attitude in the market. Particularly, rising market interest rates over high inflation and Bank of Korea's interest rate hike possibilities gave a negative impact on the market. Kospi dropped by 1.25%, and Kosdaq also dropped by 0.44% today. Foreign investors and institutional investors net sold 870 billion won in Kospi market today. All of the large cap stocks retreated today except Samsung Data System. Between industries, health stocks gained over 7% on average, and display stocks also gained 1.8% today.
Well, zooming out a bit, Professor, last month we saw a big rise in Korea's exports, and so there's been a trade surplus now for 18 months in a row. Going forward, though, there are risks from the global supply chain problems and rising raw material prices. Will we continue to see strength in trade, or what do you see ahead of us in that regard?
Korean exports are sizzling really hot from the beginning of this year. Korea's exports have increased on year-on-year for 12 consecutive months, with double-digit growth rates from March. Exports hit 55.5 billion US dollars in October. This is the second largest monthly amount since the data started in 1956, and this Korean export has particularly increased in the case of the petroleum and petrochemical products. That increased by almost $5 billion, up 68% on annual basis. However, automobiles were among the few products that saw a decline compared to a year ago, falling 4.7% to $3.8 billion. The automobile industry has been struggling due to a shortage of semiconductors for vehicles. There are still, as you said, risk factors existing, including sharp increase in raw material prices, the spread of COVID variants in related countries, and problems in the supply of the parts.
Right. And on a related front, Korea's foreign exchange reserves were up by about $5 billion last month, again setting a record high for a fourth month in a row. This is the Bank of Korea's assets, of course, in other currencies, securities, gold, other things. Deposits increased by close to $6 billion. Tell us about that and what it means that reserves keep rising.
According to Bank of Korea, Korea's foreign reserve rose to an all-time high in October, mainly due to increased profits from investment on foreign currency assets. Korea's foreign reserve came to 469 billion US dollars as the end of October, up 5.24 billion US dollars from the previous month. Foreign reserve consists of securities and deposits denominated in overseas currencies, IMF fund reserve positions, and special drawing rights and gold bullion. Deposits surged $5.95 billion a month to $25.79 billion US dollars, and gold holdings remained unchanged. However, foreign securities came to 418 billion US dollars at the end of October, down 940 million US dollars from the previous month. This foreign securities amount still represents 89% of the total reserves. So as the end of September, South Korea was the world's ninth largest holder of the foreign reserve.
Got it. All right, Professor, I will have to leave it there for today. Thank you, as always, for coming on and sharing your insights with us. We appreciate it.
Thank you very much.